Welcome to the deep dive. Today, we're going to be looking into something, I bet you've thought about before, like whose advice can you really trust,
Yeah.
especially when it comes to investing?
hmm
I got to say, brought up some really interesting points.
Yeah, absolutely. It's a really great question to explore.
Yeah.
We're going to be digging into misaligned interests.
Okay.
And these are basically situations where, the person who's giving the advice might actually have like motivations that aren't really in your best interest.
Right, right.
So-
And it's not about being suspicious of everyone, right?
Right.
It's more about understanding like the dynamics at play
hmm
and learning to think critically
Yes,
about advice,
exactly.
even when it's coming from, someone that we think is trustworthy.
Yeah, and sometimes even well-meaning advice can be problematic,
Oh, yeah.
Like, you get advice from friends or family, but they might not be fully aware of all the ins and outs, all the factors involved.
One of the examples that really stood out to me was about Wall Street analyst ratings.
Hmm.
We see those headlines all the time,
Hmm.
like analyst upgrades stock to buy.
Yeah.
And it's so tempting to think like, well, the experts, they must know something.
hmm
But one study from the Wall Street Journal found that only about 6% of analyst ratings on S&P 500 companies are actually sell ratings.
Right, and CNBC actually did some research on that as well, and they found that this trend of sell ratings being, under 10%
Yeah.
has been consistent for the past 2 decades.
So we're talking for over 20 years,
Yeah.
analysts have been recommending buy or hold over 90% of the time.
Pretty much.
It makes you wonder a little bit.
Yeah.
Because historically, over 80% of companies that go public in the U.S.
Mm.
eventually just disappear.
Right. Like it makes
Yeah.
you wonder. One of the sources actually argues that this is a classic example of what we call misaligned interests.
Yep.
And it kind of all comes down to like who's actually paying these analysts,
Right.
It's not, everyday investors like yourself.
Yeah.
It's these big institutional investors,
Huh?
hedge funds, mutual funds, and so on.
Gotcha.
And these big institutions, they value something beyond just a simple like buy or sell recommendation.
Mm-hmm.
They value access.
Access to what exactly?
Access to the companies themselves.
Okay.
Analysts play a key role in actually connecting institutional investors with like company management,
Yeah.
They arrange meetings, they facilitate research, they help these investors get like deeper insights. It's a service.
Yeah.
And that service is often paid for through commissions.
Ah. So if an analyst wants to keep those commission checks coming in,
Yeah.
they got to stay on good terms
Yeah.
with the companies they cover.
Yeah.
Giving a company a sell rating, that's probably not going to make them very happy.
It's probably not the best way to do that, right?
Yeah.
This like misalignment of interests, where the analyst's income is tied to pleasing the companies can really affect
Yeah.
like the accuracy of their ratings.
That makes sense. And this whole misaligned interests issue,
Mm-hmm.
this isn't just limited to Wall Street.
No, not at all.
Situations that are, a lot closer to home,
Mhm.
like getting financial advice from, say, your bank.
Absolutely.
Right.
Yeah, a lot of financial advisors, they earn commissions on the products that they sell,
Okay.
which kind of creates this built-in incentive to recommend products that
Yeah.
might not be the best fit for, your individual needs, but they generate the highest commissions for them.
Yeah. That makes sense. That's tricky.
Yeah.
And then it gets even trickier when the advice is coming from people who genuinely care about us,
Right.
like our friends and family.
Yeah.
Getting real estate advice from a well-meaning friend.
Yeah.
Someone who might just want to reassure you,
Right.
even if their assessment
Yeah.
isn't completely objective.
Exactly. That's a really important point.
Yeah.
Even when there's like no financial incentive,
Right?
emotions can still cloud judgment.
Yeah.
It's human nature to want to see things in a positive light,
Yeah.
especially when we're trying to comfort someone.
Right. So it seems like being a good listener isn't just about filtering out bad advice.
Mm-hmm.
It's also about understanding like all the nuances
Yeah.
and potential biases that can creep in,
Absolutely.
even from people we trust.
It really is. That's why it's so crucial to think about motivations.
Yeah.
Why are they giving you this advice?
Right.
Are their interests really aligned with yours?
Yeah.
That's something to keep in mind anytime you're like evaluating advice.
Absolutely. This deep dive's definitely making me rethink how I approach advice,
Mm.
especially when it comes to like financial decisions.
Dug a little deeper into this whole idea of financial advice,
Okay.
And potential conflicts of interest,
Mm.
particularly when you're dealing with, like, say, a bank manager
Oh, yeah.
or a financial advisor.
We've all been there.
Right.
You go into the bank,
Yeah.
and suddenly
Yeah.
they're giving you expert opinions
Yeah.
on how to
Yeah.
invest your hard-earned money.
Yeah, and as the source pointed out, the way these advisors are compensated can sometimes create a situation
Right.
where their advice might not be completely unbiased.
Right.
It's not necessarily that they're intentionally trying to mislead you or anything,
Right.
but their income is often tied to the products that they sell, right?
Yeah.
So naturally, there's this pressure to steer you towards products that benefit them, whether or not they're the best fit for you.
Right.
How, a significant portion of their income often comes from commissions earned from selling specific financial products.
Which means they have a strong incentive
Right.
to recommend those products,
Yeah.
even if there are other options out there
Mm-hmm.
that might be more suitable for, my risk tolerance or my financial goals.
Yeah, exactly. And that a lot of these products, like, certain types of funds and things,
Yeah.
they don't come with any guarantees.
Right.
There's no promise of a return on your investment, and you could even lose some of your initial capital.
So even if their intentions are good,
Yeah,
their advice could end up hurting me financially.
exactly. It really underscores the importance of, not just taking advice at face value,
Yeah.
even if it's coming from someone you perceive as an expert, like a bank's financial advisor or something.
Right. So what can I do, I guess, when I'm faced with this type of situation?
Well, one of the things they recommended was, when a bank manager or financial advisor suggests an investment product, resist that urge to immediately agree or disagree, Instead, like, take some time to actually gather more information about the product and the company behind it.
Good.
Do your own research.
Yeah, it's so easy to just get caught up in the moment
Right.
and make a decision without really thinking it through.
Exactly. It's crucial to, like, understand your own financial goals,
Mm-hmm.
your risk tolerance,
Yeah.
and then make a decision based on those factors,
Right.
not just on someone else's recommendation.
Right. So this is a perfect example of how, like, understanding the potential for misaligned interests can actually empower me to make better decisions.
It really is. It's not about being suspicious,
Good
It's
Lord.
about being an informed consumer of advice.
Exactly. Sometimes the best advice comes from sources that have no financial stake in my decisions
Right. Yeah, absolutely.
at all.
Yeah.
Speaking of that we often rely on,
Hmm?
and that's advice from friends and family,
Oh, yeah, of course.
which is usually well-intentioned, but even this kind of advice can be influenced by personal biases and emotions.
Absolutely. It's true.
Right.
Like, imagine you're thinking about, selling a property,
Yeah.
but you're unsure about the market and feeling a little anxious.
Okay.
You ask a friend who seems knowledgeable about real estate for advice,
Right.
and that friend, wanting to, reassure you and ease your anxiety,
Yeah.
might downplay any potential risks
Yeah.
or, overemphasize the positive aspects
Right.
of holding on to the property.
Right. So their advice,
Yeah.
while coming from a good place,
Mm-hmm.
might not be totally objective.
Right. Exactly. It could be colored by their own desire to, comfort and support you.
Right. It's a good reminder that even when there's no, financial incentive involved,
Yeah.
our relationships and emotional connections
Absolutely.
can sometimes lead to biased advice.
It all comes back to considering the context in which the advice is given,
Yeah.
and understanding the potential motivations behind it. Right.
Even when it comes from people we trust and love.
This deep dive is making me think about all the different sources of advice I rely on
Yeah.
and how I can get better at evaluating their potential biases.
Mhm.
It's really fascinating.
It is. And remember, no one is immune to biases, right?
Oh, that's a good point.
Not even ourselves.
That's true, yeah.
We all have our own, preconceived notions and beliefs that can,
Yeah.
influence how we see things
Huh.
and make decisions.
Yeah, absolutely.
Which is why it's crucial to be aware of our own biases as well,
Okay.
It's about cultivating a healthy skepticism,
Mm-hmm.
not just towards advice from others,
Right.
but also toward our own assumptions and inclinations.
Right, healthy skepticism.
Yeah.
It's about questioning, right? Seeking diverse perspectives.
Exactly.
Making decisions that are truly in my best interest.
It often means, going beyond simply accepting advice at face value.
Right.
Do your own research, gather information from multiple sources, and
Yeah.
carefully weigh the potential risks and rewards.
That really stuck with me was this. Blindly following anyone's advice, whether it's a financial expert, a close friend,
Yeah.
or even a family member, can be risky.
That's a powerful statement.
Yeah.
It really gets to the heart of this whole deep dive, you
Like,
know?
it's not about becoming cynical or distrusting everyone, right?
Right.
It's about being informed
Yeah.
and empowered to make my own decisions.
Exactly. The sources, they stress the importance of, like, understanding what's at stake for the person giving you advice,
Yeah.
right? What are their motivations?
Yeah.
Are their interests truly aligned with yours?
It's like taking a step back and saying,
Yeah.
why are they telling me this?
Mm.
What do they stand to gain or lose from my decision?
Those are important questions to consider, yeah.
Yeah.
And it's not just about financial motives either.
Right.
It's about recognizing the potential for emotional influences
Yeah.
and personal biases.
To shape the advice you receive.
Right, like we were saying, earlier about getting real estate advice from a friend
Yeah.
who might just be trying to reassure you,
Mm-hmm.
even if it means like downplaying some of the risks.
Exactly. That's where a healthy dose of skepticism
Yeah.
and, some independent research
Mhm.
can be really invaluable.
Yeah, don't just rely on someone else's assessment,
Right.
even if they seem knowledgeable
Yeah.
or have your best interests at heart.
Gather information from different sources,
Yeah.
consider different perspectives, and make a
Uh-huh.
decision that aligns with your own goals and risk tolerance.
This deep dive is really highlighting the importance of being an active participant
Mhm.
in my own financial journey.
It's about moving beyond, passively accepting advice
Mhm.
and becoming a discerning consumer of information,
Yeah.
someone who's equipped to make, informed and empowered decisions.
I like that. The one thing I found really interesting
Mm-hmm.
was that it took a moment to acknowledge that even their own advice should be taken with a grain of salt.
Oh, that's interesting. What did they say?
They specifically encouraged listeners to think about their potential biases
Mm-hmm.
and to always seek out additional information and perspectives
Yeah.
before making any investment decisions.
That's incredibly humble and self-aware.
Right. It's not about pretending to have all the answers.
Right.
It's about promoting critical thinking
Yeah.
and informed decision-making.
It reinforces this idea that, no one, regardless of their expertise or credentials or whatever, is infallible.
Right.
We all have our blind spots and biases.
Absolutely. This deep dive is really about empowering you, the listener, to become a more discerning consumer of advice, to recognize the potential pitfalls, and to develop the skills and knowledge needed to make informed decisions.
It's about shifting from a mindset of passive acceptance to one of active engagement
Yeah,
and informed skepticism.
we've covered a lot of ground in this first part of our deep dive.
I'm really looking forward to kind of continuing our, exploration of how to navigate this often very complex world of advice and decision making.
Me too. This deep dive's been really eye-opening so far, and I know our listeners are probably eager to hear those practical tips you mentioned for evaluating advice and making those more informed decisions.
Yeah, absolutely. Let's start with a pretty fundamental question. Like, what is the source's motivation for offering this advice in the first place?
Right, like we talked about misaligned interests earlier.
Exactly. Is there like a financial incentive involved? Are they trying to sell me something? Do they have like a personal stake in the outcome of my decision?
Right, right.
These are all really crucial questions to consider.
And they apply regardless of who's giving the advice, right?
Absolutely. It's not always about financial motivations either. Like we discussed earlier, even well-meaning friends and family members,
Yeah.
they can sometimes offer advice that's kind of clouded by their own emotions or desires.
So it's important to think about those emotional dynamics as well.
Yeah.
Is this person trying to, protect me from potential disappointment?
Mm-hmm.
Are they trying to steer me towards a decision that aligns with their own beliefs or values or something?
It's crucial to remember that advice is rarely given in a vacuum.
Right.
It's often shaped by, this whole web of motivations, both conscious and unconscious.
So, okay, so once I've considered the source's motivations, what's, the next step
Okay.
in evaluating the advice itself?
The key is to gather information from multiple sources. Don't just rely solely on, one person's opinion,
Yeah.
no matter how knowledgeable or trustworthy they might seem.
So do my own research, talk to other experts, read articles, explore different perspectives.
Exactly. Yeah. The more information you have, the better equipped you'll be to make a truly well-informed decision.
Yeah, that makes sense.
And as you're kind of gathering that information, it's also important to pay attention to any red flags or inconsistencies that might, pop up.
Oh, okay, like what, for example?
Well, be wary of any advice that sounds too good to be true,
Okay.
or that, promises guaranteed returns with little to no risk, you know?
Those are definitely warning signs.
Yeah, absolutely. And also be cautious of like advice that pressures you to make a quick decision
Okay.
without giving you time to thoroughly consider all your options, you know?
Right. Those high-pressure tactics can sometimes be a little bit
Yeah.
suspicious.
Yeah, exactly. Like those high pressure sales tactics you sometimes see, where
Hmm.
they try to create a sense of urgency to get you to buy something before you've had a chance to really like think it through.
Right, right.
And if someone tries to like discourage you from getting a second opinion
Okay.
or seeking additional information, that's like a major red flag. It's like
Yeah.
they're trying to control the narrative and prevent you from seeing the whole picture.
Transparency and open dialogue are really important
Yeah.
when it comes to making, sound decisions.
Absolutely. Now, let's say you've, considered the source's motivations, you've gathered information from multiple sources, and you've
Yeah.
kind of looked for any potential red flags.
Okay.
What's the, like, final step in evaluating the advice itself?
Well, I guess that's where critical thinking comes in, right?
Exactly.
Don't just accept the advice at face value,
Mm-hmm.
even if it seems to make sense initially.
Right.
Ask questions, challenge those assumptions.
Yeah.
Consider both the upsides and the downsides.
It's about engaging with the advice, not just passively absorbing it.
Right. So ask myself, does this advice align with my goals and my values?
Yeah.
What are the potential risks and rewards?
Mm.
What are like my other options?
And most importantly, trust your gut, you know?
Okay.
If something feels off or doesn't sit right with you,
Yeah.
don't be afraid to like question it or ask for further clarification.
It's about taking ownership of my decisions and not letting myself be swayed by
Right.
pressure or persuasive arguments or something.
It's about becoming a truly empowered decision maker.
I like that this has been so helpful.
Oh, good. I'm glad.
I feel like I have a much better understanding now
Mm-hmm.
of how to like approach advice
Yeah.
and make smarter decisions.
I'm glad to hear that. And remember, it's a continuous learning process, you know?
Right.
The more you practice critical thinking and informed skepticism, the more confident you'll become.
This deep dive has really been all about, empowering listeners
Mm-hmm.
to take control of their financial well-being
Yeah.
and make decisions that really align with their individual goals and values.
And that's something we can all benefit from, you know?
Yeah,
Regardless of our level of financial expertise.
this conversation has actually reminded me of another, crucial aspect of making good decisions.
Yeah.
One that's often overlooked.
What's that?
Understanding your own risk tolerance.
Oh, that's a great point. Yeah, that's fundamental to making, informed investment decisions.
We hear advice all the time like, invest in this hot stock or real
Right.
estate is a sure bet. But
Yeah.
what's right for one person
Mm-hmm.
isn't necessarily right for another.
You're absolutely right. Yeah, risk tolerance is a personal thing.
Yeah.
It depends on, your financial situation, your goals, and, how comfortable you are with uncertainty.
And it's not static either.
No.
Like my risk tolerance can change over time
Mm-hmm.
as my circumstances change.
That's why it's important to assess your risk tolerance regularly,
Okay.
and adjust your investment strategy accordingly.
So how can listeners determine their own risk tolerance? Are there any resources or tools out there that can help with this?
Absolutely, yeah. There are a lot of online questionnaires and risk assessment tools
Okay.
that can kind of help you understand your risk profile.
Mhm.
You can also talk to a financial advisor.
It's important to remember that a good financial advisor will take the time to really understand my needs and my goals, right?
Right. They won't just try to sell you products that generate the highest commissions for them.
Right. A true advisor will prioritize my best interests
Mm-hmm.
and help me make informed decisions
Yeah,
that are suitable for my risk tolerance
exactly.
and my financial objectives.
This deep dive is really driving home the importance of being proactive
Yeah.
and engaged in your financial journey.
It's about moving beyond blind faith
Hmm.
and becoming an informed and empowered decision maker.
I couldn't agree more. This has been a really insightful conversation.
Yeah, me too.
I'm sure listeners are feeling much more equipped now to
Mhm.
navigate this whole world of advice giving and decision making.
I hope so. It's been a pleasure exploring these topics with you.
To everyone listening, stay curious, stay informed, and keep questioning everything.
That's it for this deep dive. See you next time.